The opinions and suggestions expressed on the following program are solely those of the participants and not necessarily endorsed by program sponsors or any radio station, media company, or platform broadcasting this program. The following program is a product of Causeway LLC. The information in this broadcast is not intended as investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Causeway LLC, and the company or platform broadcasting this program is not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Causeway LLC, and the company or platform broadcasting this program makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk.
Government officials we will continue to inform you as this story unfolds.
Welcome to Cryptocurrency with Matthew J. Moore, the Bitcoin-focused radio show that's waking the masses to the fiat money Ponzi scheme. Money is changing, and your freedom is at stake. So stick around and learn how to empower yourself for this new digital age. Now, here's your host, Matthew J. Moore.
Welcome, America, and welcome, world. I want to welcome you to the only place where you're going to find Bitcoin-related content. That's right, on traditional radio. We are one of the very few syndicated radio shows in America, possibly even the world, talking about Bitcoin. So welcome to my show, Cryptocurrency with Matthew J. Moore. This is a place where you are going to learn so much. In fact, you're going to learn about money, liberty, history, technology. I mean, we're all over the place. Why? Because Bitcoin covers so many spheres. And sometimes you got to get all this information and wrap your head around what Bitcoin is doing in the world. And sometimes that's what you need to understand. But the question of the day is this: will 2023 be a good year for Bitcoin and gold? Have we finally made it out of the Bitcoin winter? I'm praying that we have. And, but a lot of people are asking, is a recession on the horizon? And people have questions like, okay, well, what does that mean for commodities like, gold and Bitcoin? Will they perform well, or will they perform, will gold and Bitcoin perform differently? I don't know, but we're going to find out today, because today we've got the perfect guest for this conversation. He may not have a crystal ball. In fact, I know he doesn't have a crystal ball, but he most certainly knows his stuff when it comes to macroeconomics, the markets, finance. He is a returning guest on the show, but this time he joins us on a syndicated version of the show. That's right, we started this party in Tulsa, but we are now a national show. So whether you're in LA, Atlanta, Seattle, or even listening online from around the world, we want you to get ready for a great conversation. And to help me dish out this epic episode is none other than my fellow Bitcoiner and co-host Eric Cooper. Eric, welcome back to the studio, my friend.
Just when I think I'm out, they pull me back in.
I know. You can't weasel your way out of this one.
No, it's good. And again, if you are looking around and if you thought, all right, I can finally quit paying attention to crypto, I can quit paying attention to Bitcoin, nothing's changed. We're just in a cycle.
Well, get ready.
Different part of a road trip.
Right.
There's no signs. There's no cities during this stretch.
It's kind of like driving through Kansas. Completely flat and boring, right?
Yeah. Going through Goodland and Colby and Hayes, Kansas. All respect to those folks.
I know. If you're from Kansas, I'm sorry. But hey, shout out to Brian LaRue. He is our producer. He could not be here today, so I am running the soundboard myself while I'm doing this show. So say a prayer for me. I know I'm going to be okay. But if you have an interest in maybe recording your own show, maybe doing some tracks, maybe some music or audio, he is the perfect guy. If you heard that awesome intro and outro that we've got on this show now, because we had to redo it when we went national, but Brian is the magician that made it happen. I mean, he is awesome with audio. So you can check his stuff out at beyonduproductions.com. And we're actually sitting here in the Blue Studio in Tulsa, Oklahoma, which is a part of SoonerMarketingSolutions.com. I want to give them a shout out because they've been so generous to us. In fact, Eric, you didn't get your Americano today.
No. I bought an espresso machine a couple of weeks ago to think I could stop spending so much at Starbucks. And so now I am drinking about 7 espresso pods a day. So I run to work like 65 miles round trip. I got to run because all the caffeine.
Well, it's showing, man. But well, why don't you go ahead and bring our guest on today?
Matt, yeah, definitely. And our guest today, like you were saying, he's a returning guest, and he's the CEO and founder of Morgan Creek Capital and a big name in the Bitcoin space. His name is Mark Yusko, and he knows a thing or two about the markets that we are talking about, the markets that we are speculating and interpreting. So, Mark, I appreciate you, sir. Welcome back to the show. How are you doing, sir?
No, doing great. Thanks for having me back. And, very excited for y'all. Congratulations on the graduation, shall we say. I always have an affinity for your show, given it's in my wife's hometown. In fact, she'll be there Wednesday. She's flying out for her mom's birthday.
Oh, awesome.
And actually my daughter's going too. And so I have an affinity for Tulsa and Tulsa time, but to hear you guys all over the world is very exciting and glad to be part of it.
That's right. We're going to make Tulsa famous, whether they like it or not. So, Mark, let's start here. I've heard you talk a little bit about, how you used to be a little bit more in traditional finance. Can you kind of share your journey about why you decided to go Bitcoin and cryptocurrency? And, because, I don't know if there's been times in your career or in this process where you've made the transition where maybe you had doubts. Are your convictions still as strong as possible?
So many questions in that, Matthew. And I'll try to be short, but I just don't do short well. But the journey has been interesting. So I actually grew up in one of the new markets you have in Seattle, Washington. So I grew up in Seattle. And I kind of lived this, what I call the technology life cycle that Bitcoin is part of. And I'll get to that here in a second. And that I grew up as son of a guy who sold and installed mainframe computers. In 1954 was their big invention out in Route 128 in Boston. They invented this thing called the mainframe computer, and they were going to let computing go from government into business. And you had a chance to invest in big name companies like DEC and IBM and Wang, and it made a lot of money. And 14 years later, there was an innovation out in Silicon Valley, out in California, and the center of the universe shifted to Palo Alto, and the microchip was created. And you could invest in companies like Fairchild and Intel and AMD, and did great as they introduced mini computers. So now small companies could have computers. And then 14 years later, now why is it always 14 years? It's always 14 years because young people create everything, right? They don't know what they don't know. They're young, they're energetic, they're vibrant, and they're coming up with new ideas. They're challenging the status quo. And, some youngsters up in Seattle that I don't know if you've ever seen the picture of the original Microsoft 11, but they were a sight.
Yeah.
But they created this little company called Microsoft. And there was this innovation around the personal computer. And a couple of things. So one, I would say many of my friends, actually, true, don't work anymore. They were smart enough to go to work for that motley crew. I didn't. Now, I shouldn't make fun of them because they're all multi-billionaires and I'm not. But they were a motley looking crew. You should Google the original Microsoft 11 picture. It's hilarious. We all look bad in the 70s, but they just looked a little tougher. But Steve Ballmer's mom famously quoted the president of Digital Equipment Corp, Ken Olsen, who said, no one, she said, honey, why did you go to work for that company? No one would ever want a computer in their house. And he has 18 billion reasons he was right, mom was wrong. So now everyone has a computer in their house. And 14 years later, and this is the big epiphany for me. So 14 years later, I was working at my alma mater. So I went to school at Notre Dame. I went to business school at Chicago. I went back to Notre Dame to work. And in 1996, I was working in the endowment. And we made an investment in this little venture capital fund out in California called Sequoia, back before it was super famous. And they put 10% of the money we gave them. We gave them $5 million out of the endowment. And they put $500,000 into this little company called Google, which at the time sounded like a horrible idea, right? There were 20 search engines already. Why did we need number 21? What was wrong with Ask Jeeves or Web Crawler or Alta Vista? But they weren't creating a search engine. They were redefining how we process information. And it became a dominant company worth, hundreds of billions of dollars. And so we put in $500K in that little company called Google, and we took out $200 million. There should be a quad at Notre Dame called the Google Quad. And I had this aha moment, literally an epiphany. I said, wait a minute, investing in infrastructure around this cycle of innovation is really important. So 14 years later, I was actually back in Seattle at Craig McCaw's house, a very famous investor in cellular technology, and I was asking his family office guy, do you think the mobile net is going to be as big as the internet? Because the internet was this big thing in 1996. And he said, are you kidding me, Mark? You asked me if they want a computer, like whatever. Ask them if they want a phone. They're like, yeah, I already got two. Probably don't need another one. So the mobile phone or the mobile supercomputer made computing ubiquitous, made the internet ubiquitous. So that was in 2010. Well, 14 years later, which is next year, we have another innovation, and it's called blockchain. And blockchain is such a monstrous innovation because it will do to financial service and value what the internet did to media and commerce. So if you go back pre-1996, all of the value in media and commerce was the big companies, right? It was these big companies like Walmart that dominated, or ABC, NBC, CBS. Today it's Amazon, a web company, and Netflix, a web company. And so why did that happen? Well, the internet made information bidirectional for the first time. In the old days, you had to go to a newspaper or a book or a physical something, an analog something to find information. The internet made all the information everywhere in the world available instantaneously at your fingertips. And you could get commerce done much more effectively and efficiently. You could exchange ideas much more effectively and efficiently. And it created massive amounts of wealth. And now we fast forward to, I'll get to the point of the story. So I worked at endowments. I invested money on behalf of endowments. And then in 2004, I left and started my own firm called Morgan Creek. And we followed this endowment model investing, backing venture capitalists and hedge fund managers and stock managers. And in 2013, I got a call from a friend of mine who said, hey, come to San Francisco, I'll buy you dinner. I was on a dinner with my friend, and he was a hedge fund manager who had worked at Tiger Management, famous hedge fund run by Julian Robertson. He had spun out and formed his own fund. We had backed him. He had done really well in the macro space. And in 2013, he said, hey, I'm shutting down the hedge fund. I'm going to send back, $1 billion, charging 2 and 20, and start a new fund focused on Bitcoin and a new fund focused on blockchain. And Matthew, Eric, I'm not joking when I say in 2013, I was not running drugs on Silk Road. I was not a cryptography student. And when he said Bitcoin, I'm like, huh? I mean, I had heard of it, but I really didn't understand it. But when he explained what blockchain technology was, the blockchain technology is simply an operating system so that you can exchange value bidirectionally, the same way we exchange information bidirectionally, right? We're using it right now. We're using something called voice over IP right now to communicate. You're in Tulsa, I'm in Chapel Hill, North Carolina, and we are talking in high definition, instantaneously, using voice over IP, which the telephone companies didn't really like, by the way, because they would rather charge us $3 a minute to talk.
100%.
So long story short, innovation always wins out. And he explained that this blockchain technology was an evolution of computing power. So along my 54, 68, 82, 96, 2010, 2024 model of how computing evolves. And I said, all right, I'll invest in that. So I didn't invest in the Bitcoin fund. That was a mistake. That fund is up about 300x since 2013. But I didn't do that. But I invested in his blockchain fund, his venture fund, and that's about 17 times, which is pretty good. And he's now manages billions of dollars again at a firm called Pantera. But I didn't really get it. So I spent a little time thinking about it. And in 2014, I'd done a little bit of work, and I used to be infamous for these really long client letters, like 30, 40, 50 pages. People say, why do you write such long letters? No one reads them. I said, they're not for the client, they're for me. Because if I don't know what I wrote, how do I know what I think? Right. So, I write these long letters, and I wrote one paragraph on why I thought Bitcoin was actually an interesting special situation. And guys, I got hate. I mean, clients were like,
I'm sure.
We will fire you. You're an idiot. Don't talk about this. Don't you know this is for drug dealers and terrorists, and it's bad. Like, wow, that's a violent reaction. Now, the funny part is the next paragraph was about Saudi equity, which I might argue is more controversial than Bitcoin. But, given what they do to journalists. But anyway, no one complained about Saudi equity. But a year later, 15, I finally got the courage to do something about it. So I orange pilled a few friends and a few clients, and we started investing in Bitcoin and Ethereum. Practically a year later in 16. And, but it was small. It was all really small. And I spent, I was spending 5, 10, 15% of my time. 2017, I had an aha moment. Now, I wish I was making this up, but it's because it's kind of funny. So I was in a Winnebago in Eureka, California, not making that up, and with my family, and we're driving up the Redwood Forest, and I had this aha moment that Bitcoin and blockchain technology was simply this evolution of computing power. And it really just hit me square between the eyes that the same way that, mainframe computers ran on COBOL and Fortran, the same way that microcomputers ran on Spark, the same way that personal computers ran on Windows or DOS, the same way that the internet runs on TCP/IP, same way that our phones run on iOS and Android. The future, what I call the truth net, where everything in the world will be connected by blockchains, is going to run on blockchain. So I really went all in. I formed a firm called Morgan Creek Digital. We raised a little venture fund, $40 million, put that to work, done pretty well. We raised a second one in 2020, raised a third one last year. And now I spend most of my time, not quite 100, but most of my time focused on the digital asset ecosystem and Bitcoin squarely with Millhat. So I told you I don't do short well, but I apologize for the long story.
No, you're fine. I mean, do you still hold the same conviction, or do you consider, like, have you gone through the waves? I mean, you said that you were ridiculed when you first got into Bitcoin, but with this new bear market, I mean, you may not have been getting the same stuff like, Silk Road, yada yada yada, but it might be different, right?
No, it's a great question, and it's a really well timed question for a couple reasons. So one, you think about when I first started in 13, 14, we were in a bear market, and it was easy to kind of not pay attention when everybody yelled at me. And then by 17, we were in a bull market. And I'm like, no, this is real. And I remember, 17, we were getting the firm formed, and we launched our fund in early 18. And if you remember, prices peaked December 17 at almost 20,000, and then immediately started falling. And we're like, oh, geez, great time to start a firm and a fund. And we were in the teeth of a bear market. And I remember people saying, oh, you're such an idiot. You left this great world of traditional finance. Why are you doing this? And it was really a trying time, but the conviction was there because I was focused on the tech. And there was so many greenfield opportunities to invest in infrastructure firms like Coinbase, which is a dominant company today, and Figure Technologies, which is doing amazing things in mortgages. And so it was easy for me to stay focused, even though we were in the teeth of a bear market. I remember being on CNBC. I remember the day exactly because it was December 7th, 2018, and prices had fallen all the way to $3,200 from 20,000. I mean, down 80+% in the teeth of the bear market. And I remember the host of the show saying, are you just going to give up? And I said, no, just to the contrary. I said, we actually just issued the Morgan Creek Digital Challenge. Said we will make the Buffett style, $1 million bet like he did with Ted Seides on hedge funds. And I actually called Warren. Someone said, if you call him after 5 o'clock, he answers his own phone. So I did, and he did. And we talked about it. And his advisors talked him out of it. But he was curious about doing it. And so I said, all right, Warren said no, but I'll challenge anyone, anywhere, $1 million charity bet. I'll take Bitcoin and you get the S&P for the next 10 years. And we got no takers. I mean, we got crickets. And now it's a good thing, right? Because we would be crushing them.
Right.
But no one would take us up on it. And remember, that was at 3,200. So here we are today at 23,000. That's a lot higher, right?
Right.
But you ask, but wait, we're in a bear market, right? We were at 69,000. Well, let's think about this for a second. We were at 69,000 for about 11 seconds. And that was the peak of stupidity and leverage and hype. And it turns out now fraud with FTX. Now, so we're in the teeth of this bear market. We have the big correction, down 75% ish off the peak, down to 15,000. Big recovery lately, and we'll talk about that. But I will be honest, right? Over the holidays, I had a little mini existential crisis, and the FTX thing really shook me because so many people thought this guy was it, right? I mean, he was called the John D. Rockefeller of crypto, or the JP Morgan of crypto. Some people call him the Jesus Christ.
Right.
I mean, blasphemy, right?
Right.
Of crypto. They called him the Michael Jordan, which is even, not equally blasphemous, but clearly blasphemous.
All our Chicago listeners are cringing.
Yeah.
Oh, I know. No, I mean, he's not equally blasphemous, but if you live in North Carolina, it probably is equally
Yeah, Chapel Hill, man.
Yeah, I mean, but look, calling him Jesus Christ was crazy. I mean, and the thing about it is he basically is a bad guy who did bad things, and he committed a massive fraud on a massive scale, and he duped a lot of people. Now, we fortunately didn't invest. Now, that's not because we're geniuses. I actually, a couple times people said, "Hey, are you interested?" And I'm like, no, the numbers are stupid, right? His first round, was an $8 billion funding round, or $8 billion valuation funding round. They only had 40 million in revenue. I'm like, no, that's just stupid. And then it went to 16, and then it went to $32 billion. So it's valued at $32 billion because people thought they were going to go to the moon, and they were naming stadiums and getting celebrities, but it was all an elaborate hoax.
Right.
And so when that unraveled and prices collapsed and people were throwing stones, and it was like, wait a second, did I miss something? Did I get something wrong? And I really spent a couple weeks really thinking about it. And the good news is I came to the conclusion that no, bad people do bad things. And I found some stats. Here's an interesting stat. Since the global financial crisis, there have been 583 banks that failed. Okay.
Yeah.
Now, we don't talk about them every day. We don't talk about those failures every day. And the fact that 583 banks failed doesn't mean everybody rushes and takes their money out of a bank, right? Mm-hmm. So, yes, one of 500, there are 500 exchanges in the world that manage, that process crypto, 500, and one of them went under. Okay.
Yeah.
So that's bad, but it's not the end of the world. And it was way worse. You mentioned it, Mt. Gox, right? When Mt. Gox went under in 2014, that was way worse.
Right.
I mean, orders of magnitude worse, because there were like a handful of places you could trade your Bitcoin. So that didn't kill the ecosystem, and the ecosystem's orders of magnitude bigger today. So I think I came away realizing that, okay, yes, there was a lot of hype, not a lot of substance, and this will sound ridiculous, but it was a $10 billion fraud.
Right.
And $10 billion is a lot of money, like a lot of money. But relative to a $1 trillion industry, it's really not that big. And that's important because the rest of the industry goes on. The builders will keep building. And I'm old, right? I'm a self-proclaimed OMG, an old macro guy. And I got white hair to prove it, and grown kids and 3 grandkids now. And what I learned in all of that is a couple things. One, there are cycles. There are good times and there are bad times. And everybody listening understands that. And secondly, that King Solomon's advisors were right? When he said, "Find me something that will always and everywhere be true."
Right.
And this too shall pass away. So this too shall pass away. And the third thing is, in every dislocation in my life, in every single one, greatness happens.
Right.
Because people are resilient and opportunity gets unlocked. And I love to tell this one story. So back in 1994, it was a big recession, the RTC, and people dealing with the savings and loan crisis and all kinds of bad stuff. And lots of layoffs. And there was this guy, and he was laid off by Bell Labs. And he said, "Hey guys, I know I'm fired, but can I take my project with me?" And they're like, yeah, whatever. Dense wave multiplexing. We don't even know what that is. So yeah, be gone. Just take whatever you want. And so he shopped it all up and down Silicon Valley, and nobody would back him. They're like, dense wave multiplexing. We don't understand. And he convinced, this is a great story, he convinced his retired third grade teacher, who, now this was probably not the smartest thing in the world, turned out well, but she gave him all of her retirement, $300,000. And he started a company called Sienna. Now what Sienna did is they shone light through a prism. And if you think about a fiber optic cable, it transfers a certain amount of data using white light. Well, he figured out that if you shine the light through a prism and divide the light into colors, each color carries the same amount of information. So he dense wave multiplexed, he increased the capacity of fiber optic networks, and Sienna became a multi-billion dollar company. And her 300K turned into 300 million. I love that part.
Right.
I love that part. And that doesn't mean go speculate on any crazy idea, but if you know someone and trust somebody and they have a good idea and they've been dislocated, and they got to feed their family, they're probably going to do some great stuff. Another one was in the recession of 2001, which I think this recession is just like that. Recession 2001, we backed a guy who wanted to start, you'll love this, a startup airline.
A startup airline.
Right after 9/11, he wanted to start a startup airline. And we're like, are you joking? He's like, no, this is a great time, right? Gates are cheap. No one ever thinks anyone's going to fly again. And he was the founder of JetBlue. And we made 20 times our money. Right. And that was a good one. But he was resilient, and he was creative, and he was forward thinking, not backward thinking. And again, I live in Chapel Hill, and we're out Tobacco Road, and basketball's king here. And I don't like to talk about the other school down the road 9 miles away, but there is this other school here, and they play some basketball, and they have this coach who was pretty good. And I got to spend some time with Coach K a number of years ago, and we're talking, and and at one point he just says, Mark, we have the same job. Like, okay, humor me, coach. What do I have in common with like the greatest, one of the greatest basketball coaches of all time? I don't see it. He says, well, think about it. We both try to scout talent. We both try to identify talent. Then we try to recruit that talent. We try to build a team. We put that team on the floor, and then we sit down. I never take a shot. You never actually make an investment. You allocate to other people. Like, oh my God, I have the same job as Coach K. Okay. And then he said, and you know what separates the great players from the average players? Like, no, but you're going to tell me, right? And he says, the average player always focuses on the last play. So how many times you see someone miss a shot, run down and commit a stupid foul?
Right.
Instead, a great player, Michael Jordan, misses a shot. He doesn't even remember taking the shot.
Right.
He runs back, plays good defense, steals the ball, makes a layup. Because you have to have that instant erasure and focus on the next play.
Right.
And so in times of crisis and in times of stress, and we're certainly in that, you have to focus on the next play. And the next play is broader adoption and more use of this inevitable technology. And it is as inevitable that we will all use blockchain and all use Bitcoin.
That's right.
As it is that we're using the internet today, despite the fact that Paul Krugman said it would never be more important than a fax machine, right. Despite the fact that Steve Ballmer's mom said no one would want a computer in their house. It's as inevitable as that.
That's right. No, that's absolutely right. And guys, if you're listening to this show, I hope you're getting so many nuggets out of this because he's spitting some real wisdom. I'm going to tell you guys, we have a lot more to cover. We're going to talk when we come back from break. We're actually going to talk about inflation, deflation. How does it relate to Bitcoin? Don't go anywhere because we have a lot more to unpack. We'll be right back. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. Do you have a strategy to obtain Bitcoin on a regular basis? Do you plan to automate your dollar cost averaging? What about getting all or part of your paycheck in Bitcoin? GetHedge.io is revolutionizing how you get paid. Hedge makes it easy to automatically convert your pay into Bitcoin. Whether you're an employer or employee, you can get started in 4 easy steps. Start getting paid in Bitcoin, Ethereum, or Litecoin. The great part about using Hedge is you can skip the exchange experience altogether and have your Bitcoin sent directly to a wallet you control. Self-custody is key, and GetHedge is giving you the power. Hedge is here to make it easy to stack those sats month after month. Bitcoin, it's a long-term play, so what are you waiting for? Start living on the Hedge, and don't forget to let them know that you heard about Hedge from Cryptocurrency with Matthew J. Moore. Use my referral link at mattjmoore.com, or you can go to gethedge.io. Again, that's gethedge.io.
Short-form video content is taking over social media, and with only seconds to capture someone's attention, our team can help you stand out from the crowd. At Sooner Marketing Solutions, we'll produce and publish engaging TikToks, Instagram Reels, and YouTube Shorts. If you feel like you're falling to the wayside and missing out on the exposure that you deserve, click the link in the description to get Sooner results now.
The sun, beaches, parties, education, and Bitcoin. This is the recipe for Bitcoin 2023, the largest Bitcoin conference in the world. Ever thought about meeting industry experts? It's the who's who of Bitcoin, and you can't miss it. Join us in Miami, Florida for the annual Bitcoin conference. Use my promo code BTC Radio at checkout. That's BTC Radio. Learn more at mattjmoore.com. Welcome back, America. You guessed it. It's round 2 of America's Bitcoin-focused radio show, and you have tuned in to the right spot. Whether you're a Bitcoin lover, newbie, expert, I don't care who you are or what you know, because we made this show just for you. In fact, Cryptocurrency with Matthew J. Moore is one of the only syndicated radio shows dedicated to this topic, and we talk about some things that might be revealing or inspiring, or, we're all learning. We're all on a journey, and that's what I want to do. I want to take you on a Bitcoin learning journey. We were going to talk about liberty, history, technology, money, energy. I mean, the list goes on and on. But on today's episode, we've been chatting about the macroeconomic outlook for 2023 and what might be in store for Bitcoin this year. We know we're currently in a bear market. I mean, we're going to talk to Mark, who's our guest today, about whether we're still spring or if we're going to move into summer anytime soon. There's definitely cycles to be discussed there. But what about gold? Is there going to be a coming recession? How will Bitcoin and gold react? Those are some of the topics and things that we'd like to cover today. But to help me unpack this forecast is none other than my faithful co-host, Eric Cooper. Eric, welcome back.
Hey, brother. Hey, it has been a good conversation with Mark. Mark has had his hands in a lot of really, really cool opportunities and moments as we've seen things in technology. He made a comment about, information, going 2 different ways. And you didn't get that with an encyclopedia. So, Mark, we appreciate having you back on here with us today.
No, great to continue the conversation, and love the focus of the show. So,
well, man, we got a lot to unpack. In fact, I think Eric's got a question about inflation.
Obviously, inflation is everybody's favorite topic right now. You hear it in your electric co-op commercials and whatnot. But Mark, in your opinion, what do you think about the inflation this year? Is it going to continue to slow? If so, to what rate? What's your take and what's your outlook here?
So I have a nuanced view on this. I actually don't think we're experiencing inflation. And people say, "Oh, no, of course we're experiencing inflation. Haven't you seen egg prices lately?" Well,
egg prices.
The point is, the eggs didn't get better, guys. The money got worse.
Right.
So what happened is, we had I believe, the greatest policy error in the history of policy errors, and I mean in all of history, in the lockdowns in response to the COVID crisis. And that set of circumstances led to an even bigger policy error, which was the monetary policy error to create half, just let that number sink in for a second, half of all the dollars that have ever existed in the history of our republic, right? So we've been a republic for 247 years now. Half of all the dollars in that 247 years were printed from 2020 to 2021. And because of that, everything appears to be rising in price, but it's really not, right? According to Zillow, right, my house that I live in here in North Carolina went up 40%. Well, my house didn't grow. It actually didn't get more efficient. It actually wore out a little bit. I had to put some money into it. It didn't get better. The money got worse. So money got devalued. There's a very big difference between inflation, 1970s style, I lived through it, where there was excess demand and limited supply, and monetary debasement, which is what we're doing right now through bad monetary policy and horrible leadership. So that's the difference. And so this number that everybody's freaking out about only went up last year because there's a 16-month lag between when you print a dollar and how that dollar gets into the economy and gets measured by CPI. Most of the CPI increase last year was two things. The price of oil. Oil went from literally zero, right? It was actually negative prices in April of 2020 for a few nanoseconds to $120. And so let's say it went from 40 to 120 steady state. That's a trebling of oil prices. That's a lot of quote unquote inflation. Well, for the year last year, oil was dead flat. It went from 75 to 75. So there wasn't a lot of inflation. The other part of inflation in CPI was used car prices. Now, used car prices happened because of the stupid lockdowns and the stupid supply chain disruption. You couldn't get chips for cars, and that's still a problem. I'm still trying to get. I have a 6-year-old Kia Niro, and I want to get a new Kia Niro. I like my Kia, but I can't find one because there are not enough chips. So used car prices, though, are collapsing all around us, and so most of the things that made up the high CPI number are now going away. And interestingly, money supply growth has totally reversed for the first time in 60 years, right? I'm going to turn 60 this year. So the first time since I was born, money supply growth went negative. And that negative is going to show up in the CPI number 16 months out. And so the long answer to your question, Eric, is, by the end of this year, inflation will be sub 2%. The CPI will be sub 2%. We won't be talking about inflation. We'll be talking about deflation again. Because here's the thing. Every single day in this country, 10,000 people turn 65. And it turns out 65 to 85-year-old people are not as productive as 45 to 65-year-old people. They're perfectly nice people and wonderful. But in terms of the way we measure productivity and the way we think about growth, it's just a different part of life. And so we can't stop that, right? We can't make ourselves get younger, and we're actually going the wrong way with immigration policy. So, and even immigration doesn't help because the average immigrant's about 33 years old, and that doesn't fix the problem. You need 45 to 65-year-olds to improve productivity and working age population growth. So we're going to have lower GDP growth. We're going to have high risk of deflation. And the last part of it is, again, every single day in this country, 10,000 people turn 71. And at 71 or 71 and a half, actually. And at 71 and a half, you have to start withdrawing from your IRA and retirement account. And so what was a net inflow into equity markets over the last 25 years is now going to be a net outflow of about $1 trillion with a T dollars a year. And just remember, $1 trillion. We throw the T word around a lot,
right? And
it doesn't really have impact. $1 trillion. The three of us would have to stay on this show for 31,710 years, which would probably be most unpleasant.
Right.
Okay. Especially for the listeners, right? And we have to spend $1 every second. $1 a second for 31,710 years is $1 trillion.
Yeah.
So $1 trillion is a big old number. And we're going to withdraw $1 trillion from equity markets, and that money's going to go into bonds. So it's going to put pressure on interest rates for the long term. And it's going to put pressure on inflation, because inflation roughly matches working age population growth, which is sub 1%, and productivity, which is sub 1%. So that's where we're headed. And we won't be talking about inflation, but what's going to have to change, and this is the big reason that you've seen such pressure on Bitcoin, gold, et cetera, is monetary policy last year was negative, right? The Fed raised rates, they withdrew liquidity, they did QT instead of QE, quantitative tightening, and that caused the dollar to rise. Through October, the dollar went up 18%, and that exacerbated the problem. Because remember, Bitcoin, gold, it's an interesting thing, right? Gold, we don't price gold in gold. We should, right? Because an ounce of gold has been a perfect store of value for 5,000 years, right? 1 ounce has bought a fine person's suit for 5,000 years, from Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. You take 1 ounce of gold, you get a fine person's suit.
Right.
So that's a perfect store of value. Now, Bitcoin is, I think, the future store of value because it's digital gold. It has all the properties of gold: scarcity, durability, but it's more portable, right? I can send you one. If I had a brick of gold here and I tried to break it into 3 pieces, it would be really hard to do. And even if I could do it, which I can't, I couldn't stuff it in my computer and send it to you. I can send you a third of a Bitcoin in a heartbeat using my cell phone. So it's a better form of gold. And I think it will be digital gold for the foreseeable future. But we don't price gold in gold. We price it in dollars.
Right.
So here's a couple of fun facts. So everybody says, oh, stocks have been awesome. Stocks are great. Really? Well, stocks made nominal highs a year ago, and then they went down a lot last year, and they looked good the first couple of weeks of January. But that's because we price it in dollars.
Right.
Price it in a devaluing asset. Well, what if we priced it in gold? Stocks have been dead flat since 1996.
That's a
since
good
I
point.
made that investment in Google, right? Dead flat, priced in gold. What if we priced it in Bitcoin? Since Bitcoin was started in 2009, it's like pennies on the dollar.
Right.
Bitcoin's up, and again, one Bitcoin is one Bitcoin. Bitcoin doesn't go up, it doesn't get better, it doesn't get more efficient. It just exists, but it's priced in other currencies. So here's an interesting fact: there has never been a bear market in Bitcoin in Turkey.
Right.
Priced in Turkish lira. The price only goes up. How about Venezuelan bolivars? Price only goes up. How about in Argentinian pesos? Price of Bitcoin only goes up. There's only been a bear market in Bitcoin where there's fluctuation relative to the base currency, the dollar, the euro, the yen. And so since October, what happened? Right. Since October, DXY has rolled over and has gone straight down. The dollar is crashing.
Compared to other fiat currencies, right?
Compared to other fiat currencies, right? But what's happening versus Bitcoin? Bitcoin's going up. Well, wait a second. In fact, Bitcoin is the best performing asset in the world this year. As great as, Peloton and all the crappy stocks that are recovering from being down 95% have done here in January. In a big short squeeze, Bitcoin's done better. Now, part of that is Bitcoin's gone through its own short squeeze as well,
right,
in the last week or so. But anyway, that's a long answer to say you have to think about inflation for what it is. And what we talk about in the news isn't inflation. It's currency devaluation.
Okay. So yeah, I guess that's kind of my, so I follow a lot of this stuff. I've listened to your work and a whole bunch of other people's work, and I'm the nerd that's listening to this stuff all day long. And I guess you're going to have to educate me because maybe I have some misperceptions, but, if I'm hearing you right, obviously my definition of inflation is not rising prices, it's devaluing currency. And whereas what I'm hearing from you is maybe the CPI, we all, the big secret is we all kind of know that CPI doesn't really measure the true rate of inflation, but you're saying that the CPI is kind of irrelevant. Is that what you're saying?
Well, I'm saying it's irrelevant as a measure of inflation. Well, that's not true. What I'm saying is it actually does a decent job measuring inflation, but what we're experiencing isn't that. Inflation is when there's excess demand and limited supply of a good or service and price rises, right? That's how, if there are more people that want cars, then car prices go up. That's inflation. If the value of something doesn't change and the currency that I'm buying it with has been devalued, that's not inflation. That's currency devaluation. So if we had kept the money supply constant and we were all trying to buy a limited number of cars or houses, then you could call that inflation because the price is rising because supply and demand get out of whack. If the price is rising because the currency got cheapened, meaning we had $1 trillion on the left side of the table, we put $1 trillion on the right side of the table, now we got $2 trillion, the value of the money just went down by half. And you asked a question earlier about gold. So if you think about gold should have risen about 100% since 2020. Now, it hasn't been quite that. It went from 1,100 to about 1,900, so it came close. Bitcoin went up almost exactly 100%, as it should have, right? If you devalue the currency by 50%, the commodity that you price in dollars should go up by about 100%, just 1 over 0.5. And so that's about what happened. So the other problem with CPI is it excludes the things that we all buy, food and energy and shelter. Right. So it's a funky measure, and they've been changing the definition of the measure for years because it's the number one thing that's used to adjust transfer payments, Social Security, Medicare, Medicaid, and the government wanted that number to be very, very low for a long time. So arguably, there's something called shadow stats that says if you calculated it the way you did in 1986, it's more like 13, 14%, not 6, 7%.
Well,
anyway,
you said that you are kind of expecting a decade of major deflation due to things like population and other circumstances. But, from my understanding of the Federal Reserve and how our monetary system works, and even the government, on a fiscal side, won't these deflationary pressures encourage them to print way more money to fight the deflation than we saw in COVID?
100%. That's exactly why I'm so convicted about the upside for Bitcoin.
Right. Yeah. No, that makes sense. Well, this has been awesome. I've been loving this conversation. As far as gold versus Bitcoin, you're saying that you see in the future more money going into Bitcoin over this deflationary period / Fed gearing up to fight the deflation by printing more money. Am I hearing you right that you think that because
gold is fine?
Yeah,
gold is fine, and gold has something that Bitcoin doesn't. Right? Gold, a physical coin or a physical bar, earrings, candlestick, chalice, whatever it is, can be physically possessed, and we've all heard the stories of people who got out of Nazi Germany because they had gold and they could give it to the guards to bribe them to get out. So in total Mad Max kind of crazy, gold has that one advantage. Now, that one advantage I don't believe is enough to make it more preferred than Bitcoin as a pure store of value, because gold, the amount of gold that's mined every year roughly equals the amount that's lost or stolen. Right. So the stock, the amount of gold above ground in the world relative to the flow is a high number. Right. Okay. The higher the number, the more scarce the asset. So, collectible Porsches have the highest stock to flow because what happens is what's called the dentist wrap, right? The dentist buys the Porsche, doesn't know how to drive it, drives it around a curve, accelerates, and wraps it around a tree. So no more Porsche. And so the ones that survive, Jerry Seinfeld and John Shirley, the guy from Microsoft, bid against each other to buy them and put them in a garage. So collectible Porsche have actually been the best performing asset over the last 20 years because they're very, very scarce. And the more scarce something is, the more valuable it is. So Bitcoin has the same stock to flow ratio as gold. There's very little new Bitcoin created relative to its stock, and that amount that's getting created every year diminishes every year for the next 140 years. And we have a schedule.
Right.
And so that scarcity, coupled with the fact that it's more divisible and more portable. So I don't know if you've ever seen the movie Knight's Tale. It's one of my favorites.
Love it.
There's a scene where Heath Ledger, wins the sword match, and he gets the little calf. and his page has gotten in trouble gambling, and he takes the calf and he bangs it on the table and breaks
Snaps
off the back half and says, hey, go do what you do with this. That's a really bad way to divide gold. And as I said earlier, if I had a bar of gold, I couldn't break it because I'm not strong enough. But even if I couldn't stuff it in the computer and send it to y'all. So Bitcoin has an advantage over gold. But here's the real thing. If I ask anyone, in fact, if I asked people who are listening to the show, if I asked anyone over the age of 35, who's your broker? I don't know, UBS, Merrill Lynch, whatever. How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, are you kidding me? It's a Ponzi scheme. 0. Haven't you heard that Peter Schiff guy? How often do you use DeFi? What's DeFi? Okay. Yeah. If I ask anyone under 35, who's your broker? What's a broker? You mean Robinhood? I have a Robinhood account.
Right.
How much gold do you have? Oh, 0. Boomer rocks? Are you kidding me? Haven't you heard that Peter Schiff guy? How much Bitcoin do you have? I don't want to talk about it. Why not?
Yeah.
It's a really big percentage of my net worth. I'm kind of embarrassed. How often do you use DeFi? Every day.
Right.
That digital divide is so real. Digital natives are not going to use boomer rocks. They're not going to use brokers. They're not going to use cash. They're going to be completely digital, right? The kids being born today are going to be fully digital. They will never have a conventional wallet. They will never carry paper currency. They will be fully digital. Everything in their life will be digital. Mm-hmm. They won't know what a record album is, right? Where I actually had a black vinyl disc that spun around and made music. They will have no idea what that is. And so that digital divide gets exacerbated by the fact that my generation is going to pass to your generation, my kids' generation, $39 trillion, there's that T word again, $39 trillion. That money isn't going to stay in stocks and bonds.
Right.
It's going into digital assets for sure.
Yeah. Yeah.
21% of millennials today own Bitcoin. 21%. And that number is 50 times higher than the average boomer, which might be 0.1, 0.2%. And I should form a support group, Boomers for Bitcoin. Right? But the reality is that number is going to go from 21 to 100.
Right.
And the I think they call them, they're not the Gen, what comes after?
Gen Z?
The Gen A, the Gen Alphas.
Oh, Alpha. Yeah, Gen Alpha.
Yeah, Gen Alpha. So the Gen A's are like I said, they're going to be fully digital. And that's a pretty cool thing. So ultimately, what's exciting about Bitcoin is it's a perfect form of money.
Right.
And what do I mean by that? I mean, it is durable, right? It's long-lived. It's fungible, meaning it can move around and interact in lots of different ways. It is divisible. It's portable. And it's backed by math, not by trust.
30 seconds.
So the great thing is we're replacing trust with truth. For 800 years, we've relied on trust. Banks we trust, insurance companies we trust, brokerage firms we trust. We don't have to trust anybody anymore. We'll have truth. We'll have a digital record on a ledger that will be ultimate truth, and that's what Bitcoin is.
I love it. Well, and that's all true. And I would say, Mark, if people wanted to follow you and find your work, where would they go?
So at Mark Yusko, MarkYusko on Twitter. We have MorganCreekCap.com. And then if you just type in my name into Google, a bunch of letters I've written and things, you can actually read that aha moment. Digital Gold Rush, I think, is the name of the article.
All right, well that's a wrap, and that was a big juicy one. So I hope you enjoyed that, guys. In fact, hope you learned something. Remember, check us out, same time, same place. We'll see you next time.